Now, with a move that Americans have been waiting for, yesterday the Fed announced it is cutting its key interest rate by 0.5%. But it can be confusing about the impact of this, so we brought in financial advisor David Hicks with Oakmont Advisory Group. Thank you for coming on.
Yeah, thanks for having me.
So let's talk about first just how this is going to affect us.
Yeah, so it's going to affect us in a lot of ways.
Yeah.
This move down was highly telegraphed, but what was a surprise was the fact that the Fed did decrease it by 0.5%, not 0.25% that was expected. So we're going to see that in our pocketbooks, from lower interest rates to lower loan rates. And so there's a lot of areas that are going to be impacted by this very quickly, a lot sooner than expected.
Let's talk about the impact this has on home buyers and sellers.
Yeah, so home prices and the home sector in general is very interest rate sensitive. So this is going to have an impact. So the hope is that this is going to spur on activity with home buying. We know the interest rates reached multi-decade highs just last year at over 8%. Now they're about 6.3% going down. So that makes homes more affordable for more people. The median home price in New Mexico is about $375,000. That's up about 8% from last year.
Yeah.
So home prices are more expensive. It's more expensive to buy a home, but hopefully now with interest rates coming down, it'll make it a little bit more affordable for people's wallets.
Put it more in reach for them.
That's right.
We know these rates affect so many things, so let's talk about people who buy and people who save, how that impacts them.
Yeah, so while interest rates are lowering is good for loans, if you're a saver and with your money in CDs or checking accounts, you're going to see that interest rate go down as well. Mm-hmm. That's not necessarily a good thing. So we've been used to 4.5%, 5% interest. Now that's going to come down a little bit quicker than anticipated. So now would be a good time to maybe lock in rates at a higher position before the more decreases happen in the future. So buy a CD, get a multi-year guarantee annuity for 2 or 3 or 4 years, lock in 4.5% interest now. So when interest rates come down in the future, you're still earning a decent rate of return.
So do they notify you like it's dropping now? Is this an immediate drop?
They do. I got notified just yesterday that
wow.
my high yield savings account went down about 0.5%. So that's going to be typical for everybody across the board.
Can you lock in a high yield savings account rate?
You can't. No. It's variable, so it's going to move with interest rates. So that's going to affect most people's savings accounts. So the way to do that is to go to a bank, buy a CD, lock that in for 12 months, 18 months, 24 months, and that way you're hedging against the inflation.
All right, David Hicks with a lot of great advice. We'll put this information for you at KOB.com.